Okay, good morning, folks. Welcome to the Thursday Claims Trade Balance Trade Room 10-minute trades. My name is Lee Goldstein. I'm the trading director at 10-minute trades. Please remember that all the trades we discuss are for educational purposes. It is possible to lose money trading futures, so please trade carefully. Okay, good morning, everyone. So I just want to, I'm going to shoot over to the euro. German CPI was just released. Well, there's so many different CPI reports, it can get very confusing, but just curious to see if there was any reaction. So the news was released. So the initial reaction was down, which is kind of interesting. The CPI was up, so maybe they're thinking it's inflationary. Just curious to see. So on the German markets, you could always look at the euro as a possible trade. Euro is 6E. Now, so this morning, so what happened this week, the first week of the year is always interesting, a little tricky. When I made the schedule, I almost always have a plan in advance regarding what I'm going to trade, live. Chantal's asking, isn't it GDP? Financial Juice says CPI. Chantal, it says CPI. No, it seems to be CPI. What do you mean? I'm sorry. You mean look at the British, ultimately with Germany, you want to look at the DAX. That's the real index to look at for Germany. I don't think the British pound would do that much. On that report, there's a report I've never paid attention to ever, so I don't really see a tradable move on the pound. But the DAX, see, we don't use the DAX these days. Years ago, we used to trade the DAX, but there were so few trades. When there were a couple of trades that made paying, you have to pay extra for the DAX. It's about $30 a month. And years ago, there were about at least three good trades that worked with the DAX. And then they changed. They stopped working. It just didn't pay to pay for the DAX anymore. But ultimately, you have the DAX, and then there's the euro. There's like a mini S&P for the German market, and it's escaping me what it's called right now. It trades very similarly to the DAX, but it's much, much higher in liquidity. I'll have to look it up later for people that want to trade. If you're interested, you can buy the data for the DAX. If you trade the European market, if you want to trade the German market, then the DAX, I can't believe I can't remember the other end. There's another index that's much safer and easier to trade than the DAX. The DAX can be an account killer. It can be. Now, when I started this week, what I was starting to say is when I make a schedule, and I usually start making the schedule on Thursday, and I usually finish it on Thursday, then the calendars have been pretty accurate early in the week, like on a Thursday, so that I can make the schedule this early, like today, for instance, and it'll be very accurate for next week. But this week, the calendars have been, they've been more inconsistent since the crisis began, the world crisis. Especially investing.com. I always have to check investing.com's calendars against another calendar because they've been getting a lot of dates and times wrong lately. So keep that in mind if you're looking at calendars. Forex Factory and financialjuice.com. Financial Juice is great. Okay. They're a little bit different though. It's not quite as extensive a calendar, but it's very good. It's very good, especially during the news. But Forex Factory, for me making my schedule, is the gold standard. And even Forex Factory's had some inaccuracies, more than usual, over the past year. And this week was one of those examples. When I made the schedule this week, today's Thursday claims was by itself. Now, when Thursday claims trades by itself, I'm interested in trading it. And one of the reasons, when you look at the daily market mover today, it's a mini daily market mover. This usually signifies that this is an event we haven't been trading regularly, okay? And after the schedule was made, after the trade room was scheduled, the news calendars changed and trade balance was added to the Thursday unemployment claim report. Trade balance, I've never seen it, a full trade balance report trading with Thursday unemployment claims. So I have absolutely no frame of reference to understand what kind of move we might get. Also, very honestly, it's the first week of the year. I'm extremely conservative this week, and I'm 100% trading the jobs report tomorrow. And I'm educating today on natural gas. I highly recommend everybody come to the natural gas room. ISM, to be truthful, I haven't even decided yet what I'm going to do with ISM non-manufacturing. And we'll talk about that in the ISM room, okay? But this morning's Thursday claims, especially in light of the gold market, it's down a ton. The markets are tremendously volatile. If you got here early, there was a gold magnet trade to the downside. Right, if you were looking at gold at 10 to 8, remember what I said about those magnet trades? If you see the low of the day or the high of the day, and it hasn't been tested, especially for hours. So if you scroll back, you see this red line, that dotted line, that's the low of the day. How do I get that dotted line on my chart? Let me turn my recorder on. First of all, nobody has said a thing except Chantal. Chantal works for us. I just want to make that clear. Is everybody alive and okay out there? Just type in hello. Let me know you're alive and awake and paying attention. Just type hello. Great. Okay. Very good. Very good. Very good. Very good. Now, I also want to say something. Mark and Steve, Nick, we're going to do a presentation, and you don't know it yet. All right. Steve, if you could email me, Steve, Nick, email me, because I want to talk to you privately about my idea. And Mark, I'll email you. I'll email you. And if you're interested, great. If you're not, I'm not going to bug you. But anyway, so getting back to Thursday unemployment claims with trade balance, it hasn't traded together, I don't recall ever. And the gold market's down a lot. It's very negative. This is not a gigantic report for impact, okay? It's just not a gigantic report for impact. We missed the magnet trade, the test of the high or the low. And how do you get the high or the low on your chart? Right-click your chart, click indicators, and then NinjaTrader has a free indicator. Scroll down. It's called Current Day OHL. Double-click it, and then apply it and okay it. And then you'll have that indicator on your chart. To me, it's one of the most important indicators because I think the highs and lows of the day are important. People look at them. There's a million other indicators that people use that I don't even think about, Fibonacci's and things like that. I think they're waves, Elliott waves. I think that for me, they're not very useful. All indicators, 99% of all the indicators are lagging anyway. So that's why I use very few of them. And we're trading events where the indicators, they're good after the trade, but before the trade, they're not going to really affect us that much because we're trading moving markets that move. And you could trade with no indicators. You don't need anything to trade the way that we trade, okay? So you don't have to get all bent out of shape worrying about indicators or worrying about your charts. Calvin, I don't know what you mean. Calvin, I'm missing something. Oh, are you just saying, Calvin, are you just responding to my asking if you're alive? So that's a great indicator, current day, open, high, low. And I also put the NinjaTrader pivots on my charts also, okay? And we've already had an explanation of how to make my charts. And there's a little video of how to make your charts exactly like mine if you want to. You can just send me an email, help@eminenttrades.com if you want that video. Everybody should sign up for our YouTube channel. I'm working on making every video on our YouTube channel public. I just want to click one time and make all our videos public. There's so much educational, and we have not handled our YouTube channel properly. We didn't know when we first started this, and we have a lot of content. Anyway, so let's get back to unemployment. So I'm not really interested in trading it live today. Multitude of reasons. It might have been a possibility. If it was trading alone, I would. And I think you'll come to know me. You'll know I'm never afraid to trade, but I'm also been doing this long enough that I'm never afraid not to trade. And that is the hardest thing to learn because I'm in a trade room with lots of people watching me. There's a lot of pressure to trade no matter what. Otherwise, you look like a baby or you don't have the guts. But that's not what trading's all about. You know, we've had 3 winners this week. We had a loser. API was a loser. ISM was a winner. I'm going to trade when there's an opportunity. I blew the FOMC yesterday by not being patient. Look at one of our members traded yesterday's FOMC. He stayed in the trade longer and he made $650 on that down move. No, you know what? He made that, remember when it burst up first? He grabbed that burst up. And then ultimately, the trade was down yesterday. So I'm going to change the way I do FOMC minutes. I'm going to stay longer and look for maybe we'll have to change our name for that trade to 20-minute trades because I think there's opportunity on that type of report to get in much later. So I'm going to think seriously about looking at that. You know, we'll still trade it the normal way because we had a couple of setups yesterday and our setups worked. I just wasn't patient enough because it didn't behave the way I expected. Sometimes if an index doesn't behave the way I expect, then I don't trade. And that's what happened to me on the FOMC. It's not an excuse. It's waiting for an expected behavior. If that behavior doesn't come, my plan is not to trade. However, sometimes you have to just think a little bit harder about what you're doing. And I really should have just been more patient. I mean, that's the truth. I knew there was going to be a move. It looked like it might have chopped around, but there's almost always a move. So I really just should have been patient. And that's the last I'll think about it. I won't think about it anymore. I won't torture myself. I just wanted to remember to talk about it today. So this is a mini daily report. And Thursday claims a year ago. I didn't look at this video, so I have no idea what it looks like. We were trading the ES a year ago on this report and watching gold. Then the ES stopped moving in a tradable manner, okay? Now, partial trade, it's interesting, a year ago, trade balance was there. So that's the last time I think I recall trade balance being involved with this report. Not a very impactful move a year ago. Not a very impactful move. In fact, there was no response. Not much of a response. And that's what happened. That's why we stopped trading this report. It stopped moving. But I noticed, like in December, when it traded by itself, I noticed it had a very nice move. And I'd been talking to some other members. So I decided, well, let's give it a shot and see if there's any movement. So I'll tell you what we could do today, which is fun and interesting. I'll throw the micro on. I looked at the micro gold this morning, but see, December had a very nice move. I'll throw micro gold on. And I'll put the trade on with a micro, okay? And we'll watch gold. I was going to watch Canada because Canada has their trade balance, but we'll go back and look at Canada. Just remind me so I don't forget, because I'd rather watch the reaction of full-size gold. Now, I'm only, even though it's a micro, I'm only going to put on one contract. I'm not interested in losing money. I'm interested in learning, how's micro gold trading this year? Is it going to be tradable at all for breakout trades? It's the one micro that's a little bit strange. It's not a new micro. It's not like micro gold or the micro NQ or the micro ES. So let me put the strategy on. So you can see there's targets of 8 and 15, right? So what I'm going to do is put one contract on of the micro. What we want to see is there a tradable move on this report? And is it tradable with micro gold? Now, one trade isn't going to tell us. Okay, it just won't. But it'll start giving us an idea. And this is a weekly report. So in a couple of weeks, we'll have an idea. I'll be watching it, whether it's tradable. Now, I truly think that you can probably put 8:30 as the start time on this report. I'm going to put 8:29.59 because that's what the DMM says. That's my entry time. And I'm going to trade it. I'm risking about $12 to $20, okay? Trading one contract. I'm trying to think if I want to trade two. It's actually easier. You know, it's easier to trade two contracts than it is one. When you trade one contract, you have to guess what to make your target. And I think it's much harder. But let's do what I said I was going to do. I want to see if there's a tradable move. So I'm just trading. The only values I have to change, the bracket is 8. My position is 1. I'm looking for a 10 tick move. So we need an 18 tick move at least, because the bracket is 8, right? To hit my target, it's got to move 18 ticks. The stop is 12. And the entry time is 8:29:59. Now, my only hesitation this morning, honestly, is gold is so down, right? Gold is so down. The trend, the markets are so down. They did not like the Fed news. Did not like the Fed news. At all. Now, we just missed the gold open. Gold market just opened down. And, you know, that was a good setup for the gold open. Yeah, Dutchy, it used to be if the markets were down, gold was up, but it just doesn't work that way anymore. It just doesn't. It hasn't been doing it all year. You cannot count on that. That's a change that it's been changed for so long now. But if you're a gold open trader, it was a nice setup because it went up first. It went up before the open, making you think the gold open was going to be up. The one rule about the gold open is don't try to guess what the direction is going to be. If the gold market opens at 8:20, okay, and there's often a tradable move. It's hard. It's not easy to trade it. But so if you look, gold's been going down heavily all morning since we got here. But then right before the open, it starts moving up, up, up. And then 8:20 is the open. And then it starts following the trend again. It's kind of, that's a kind of nice setup, right? That's a setup that you like to see. I think if you're a discretionary trader, you want the trend to change temporarily, right? So that you can get an entry back in the direction of the trend. And that's exactly what happened on the gold open. Yeah, it could be a lousy day level wise. Now, when, you know, if 300, see, gold is down over 350 ticks. This is another great indicator. It's called net change display. Right click, indicators, free, part of Ninja. It's another one of my favorites. Net change display. When you install it, you can look at an index in ticks or in points or in currency. So I like to look at, you know, the NQ, I would look at points, ES points. Gold, ticks I like. Points, gold is $10 a point, right? 10 ticks for $1. Gold is 10 ticks $1. So gold is down a ton, okay? It's down a ton. And it could really make this trade untradeable. It's just a tremendously large trend to the downside. It's very big. Bigger than most days. Bigger than most days. So net change display, you know, it's personal preference, how you want to look at an index. So if you ever wind up getting financial juice, it's really interesting because in my headset, I can hear him talking about the imports and exports and trade balance and soybeans, and it's really good stuff. It's really interesting. And years ago, to subscribe to a Squawk Box cost hundreds and hundreds and hundreds of dollars. It was really expensive, really expensive. So now I don't consider this is not a magnet trade for me. See, gold's just making new lows. That's not a magnet trade. The magnet trade was further back before gold even tested the low, right? Before gold tested the low, it was like 10 to 8 and gold was moving down. Now I would have been thinking, you might have a magnet trade. Gold is unbelievably negative. There's a good chance it's going to test the low because it hasn't tested it in hours. That's exactly what it did. So that's what I call a magnet trade. They don't always work, of course. This morning you had a lot of, you had a big trend working in your favor. And yes, you can have a million indicators that'll tell you, to confirm whether you're going to get that downward move. But sometimes, there's a lot of traders out there. They trade with no indicators. They just look at price action. So, you can look at price action and trends, and there's still plenty of opportunities. You don't have to use a million indicators. Couple of good ones is all you need, if any, right? For us, trading news, again, I'll say it over and over, you really don't need any indicators. All you need is a candle and a price chart and the software. You don't need much more. Now, there are the reason I like certain indicators, certainly after the news, it's nice to look at levels. And then today we'll talk about the natural gas after the news trade. We couldn't do it yesterday in the oil room. There was Amazon apparently had an internet outage, a short-lived internet outage, but it affected the trade room, because the trade room is browser based and the internet interfered with the trade room being online. That's why we had so many problems during the oil trade yesterday. So I'm going to have one order show up 1 second before 8:30, an 8-tick bracket. So there's my bracket. And the news is mixed. I'm going to cancel, okay? Plus, there's no big reaction. So why am I canceling? I noticed that trade balance Well, no, trade balance is late. Okay. Trade balance is late. No reaction from the jobs. All right. No reaction. It's just chopping a little bit, chopping a little bit. US trade balance is out and it is negative. And it's so things are negative, which normally would push gold up. I don't think gold can push up very far because of the trend. So, it's a minute already and it's almost where it was. Let's watch for a minute. I'm extremely conservative with a report that has no testing. This report has no testing. So we would be not in the trade. Okay. Now I'll show you something interesting. So you notice that I canceled my trade, right? I didn't take the trade, which turns out it was not stupid. Okay. Now you're getting a downward direction, which is what I would rather see would be good news, which might have continued to push gold down. I don't think I would have wanted to go long on this trade. But what I was going to say is, so I turned off my orders. If you click this log category here in the control panel, the software records where your orders were. Cancel your trade so you don't accidentally put yourself in a trade by unchecking it. Go to log and make the screen full size. Let me show you something really cool about the software. See those yellow lines? It shows you on both indexes, because I set up two different trades. If you set up two different trades, it shows where my long or my short would have been. 1787.40 was my short. 1787.40. So watch this. I'm just going to change my crosshair to a crosshair. 1787.40. We would have filled short on that candle there, okay? And we'd be stopped out, okay? Because the market then went up. Now let's check and see if we would have gotten filled long first, though. So you could see, did I cancel the trade and miss a winner, or did I miss a loser? Long was 1789. Our long price was 1789. It did not get there. It went to 1788.90. Holy crow. So it wouldn't have filled us long. We would have gotten filled short, and now we'd be in the red. Okay? We'd be in the red. And it's partly because we're not sure what happened. This trade, we have no testing. So I'm just not really sure of the reaction, and I'm not sure how this weekly unemployment is going to trade this year. Okay? So I don't mind being conservative on this report. I don't mind being conservative on any report because it's a dribbler. All right. This is what I call dribbler. Now you got some movement, right? You got some movement. What did we say? 1789 was our gold long. So 1789, and it went up to 1790.40. So there were 14 ticks available, okay? But according to our setup, we would have got filled short first, okay? Now, right at the news, the squeeze signal started trending long on the 1 minute chart, and they're still looking long. Would I go long in this market? I'd go long very, very, very carefully because the market is so down. It's hard to get a lot of ticks in a super negative market. I think everybody knows that from a discretionary trader point of view. You want to trade in the direction of the trade. Now, gold often used to go up when news was negative. The news was negative, okay? But you noticed also that trade balance showed up on the website a little bit late, But you are getting a push, somewhat of a push up. But it didn't work for our report. It didn't work, okay? And I didn't see an immediate reaction at all. So for me, I'd rather, let me step aside, see what the market does. You don't always get an immediate reaction. But, you know, maybe an 8-tick bracket is a little tight, but I think even a 10-tick bracket, I don't think a 10-tick bracket would have saved us. Because what did we say the short was? 1787.40, right? 1787.40. So here's the news. It misses the long by 1 tick. Who knows? Maybe you would have gotten filled. Sometimes the market does crazy things. 1787.40, 30, 20, 10. No, so you'd need too big a bracket. A bracket couldn't have saved that trade, a change in bracket. I think we did the right thing by stepping aside. Yeah, you know, the NQ is a possibility on this report also. So if you look at the NQ at 8:30, but it went up first. It went up quite a bit first, Rob. So not sure that that would have been a very profitable trade. Looks like it would have stopped you out first. It might have filled you long and then stopped you right out. So, you know, the reality is we haven't been trading this report because it's been inconsistent. So inconsistent means you watch, let it become consistent, and then trade it, right? You don't need to give the market your money even with a micro. That's the most important rule. You don't need to give the market your money even with a micro. All right? All right, folks, we'll be back at 9:30. Any questions? Any questions? We'll be back at 9:30. We're going to stay in the trade room until natural gas, which is at 10:30. Okay? That's what we pretty much always do. And so there was an upward move. Our setup would not have caught it. We would not have caught this winner. It would have been a loser because we would have got filled short and then the market changed. Okay. And we would have gotten filled short down at the bottom of the candle. This was the candle, the 831 candle. So not much of a reaction for the first 30 seconds. So I decided to watch. And it was a good decision for our setup. Okay. And you didn't really have a very good squeeze signal to get you in. It was already long on the 30-second chart at the time of the trade. Now, there are some people that, you know, you think about it, how much can gold go down in one day, right? How much? It was down over 350 ticks at the time of the report. All right, everybody. I'll see everyone at 9:30 for ISM services. ISM services. Okay, Derek. See you later. See everybody in a bit. And thanks everybody on YouTube. we're going to shut it down. Sign up for the channel, subscribe, hit the notification bell so you know when our next stream is. And we'll see you on YouTube tomorrow.